what that means is any given point, we have to understand that price could close back below the range, right? We're not saying it is going to do so. We're just saying we're putting out all the scenarios. And in this scenario, there's a possible scenario where price could close respecting it. If price does close respecting 2080 in about 9 days and 9 hours, which is way after FOMC, then there's a high chance that you'll be breaking back into the range between 1980 and like 90 or in 2000, right? There's a slight chance that could happen, right? But as of right now, obviously we're bullish, we're at all-time high, so like we are obviously expecting price to continue pushing up. But FOMC is today, and today will impact the rest of the month, I would say, for the most part. Like today should give you direction or liquidity to drive within the next couple of days to end off the month, right? So today's either gonna give you that liquidity to drive in a direction for the rest of the month, or it's going to grab liquidity and in the next 10 days it would drive in a direction. But that's likely what you'll see from FOMC today. Again, bullish or bearish, doesn't matter where you go. If you come up, all-time high is great. If you come down, amazing. You got clean traffic on the way down. So I'm not really on any side. It really comes down to what price wants to print. But yeah, there's a possibility, chat, that we could close respecting. And if you close respecting this resistance, then you're kind of breaking back into the range, right? And you know where you're going next after that. But yeah, overall, again, still bullish as of right now, as of 8:24 a.m. on a Wednesday on March 20th. The weekly time frame, chat, if you guys take a look at it, last week you closed bearish, but it doesn't really change structure. You're still overall bullish, obviously. If this candle here were to close bearish below like this low here instead, okay, sure, you can say, okay, cool, we're going to come down for the range, right? But this candle closing bearish doesn't really mean much in terms of bearish momentum just yet. It's just, again, I guess you can say resistance has been formed there, but it's not breaking structure. It's still respecting these zones here. So until you actually close below these ranges, you're in between 2080 and 2180, right? But what you could say is, you could say overall, yes, we're bullish. So you would obviously expect price to drive up at first glance here. However, if price were to drive down the opposite direction, what will make the most sense before price drives down? You will likely see a top wick before price rips down, if that were to happen. Again, we're not saying it's going to rip down. We're not saying it's going to rip up. We're just putting out the possibilities out there. And in this case here, if price were to rip down, you would need to grab liquidity first before ripping down. So therefore, at some point, you're going to have to re-break this highs, which is also the weekly flip and the weekly wick fill at the same given time. Or no, not the weekly wick fill. I think that's the daily range fill. That's what I meant. Daily range fill, weekly, I guess, top wick area, right? But let's say you were to close bearish this week like this. Even if you were to close bearish like this before ripping down towards 2080, right? That's a pretty steep level to be at. You're gonna have to break the highs at some given point. So you are in positions to look for positions going up towards the retest of the highs, which is gonna be 2180 minimum at first before ripping in any sort of direction, right? Because if you were to rip up, you'll fill the range. Obviously, if you were to rip down, you come up to fill the range before ripping down, right? So in this case here, I would assume that price will make its way up there. Again, we're not here to choose sides. We're not here to choose a bias, bullish or bearish. It doesn't matter. It comes down to just understanding what part of the cycle you're in, because there's 3 parts of the cycle: range, continuation, and liquidity. So when you can identify what part of the cycle you're in, you're able to identify the next very step before that move gets taken place. So in this case here, if we have a continuation right here and we're starting to form a range, right? If you drop down to a daily here, if you had a continuation, right? This is your continuation, obviously, and this is your range. The next step is liquidity. So liquidity leads to direction. You don't have to guess and predict where that liquidity is going to be at. You can assume that, okay, if you were to rip down, you get that top wick, which is also that daily range fill, right? Before ripping down, just like how we looked for it yesterday at 2060. And if you look for more buys up, then you would assume that you'll get some type of bottom wick before ripping up to make all-time highs, right? So that's what you could put in here and say, okay, cool. Those are 2 things that you can look out for over the next couple of days. Hopefully FOMC creates those top wicks or bottom wicks for you. But you could start to see direction afterwards, right? And it only makes sense with FOMC coming in and that volume you have coming in at 2 p.m. later on and the next 10 days. But yeah, that's the daily candle. Again, it's just in a range. You can't really say much about this. I would assume that you close bullish I think on Monday. Tuesday you close bearish, respecting this support. So this level is still being respected here. So what that means is this candle here, right? Since yes, this candle closed bearish, could easily come down to fill the wick, but since it's respecting any given point, it could still flip bullish and break back into the range here. This is still a scenario, a possibility, right? If price was to make its way up last night during Asian London and then New York session this morning, like pre-NY, then I would assume that FOMC could continue to push down once it closes below 2154, because then that's your top to rip down. But you don't have that top wick yet, and you're starting to shift down first. So could this be a possibility of us pushing down until FOMC, and then FOMC flips bullish to fill the range? I mean, I guess we'll find out, but what we can say right now, from what we know, is you have some type of support being formed there, and this is the range you're in between 2154 and 2180. I believe the next thing you can look for here is, I guess you can say, the wick fill down, right? So that's the next step of the move, I would say, because you have the daily wick fill, and that level takes you down towards, I believe, 2147, 2148. So let's see how we can grab that. But dropping down to the 4-hour time from here, you have 31 minutes here. You still have no top wick on the 4-hour candle highs, which means at any given point you can still create that top wick. It could be on the flip of this candle. I would assume that if this current 4-hour candle were to flip bullish, it will continue to drive up for the rest of the 4-hour candle. However, if you close bearish in 30 minutes or on the 4, you would assume that the next candle will come out, create a top wick, and then you will get a wick fill down after the top wick, because this candle has no top wick here. All right. So for our closure would be, I'll say, a lot safer in terms of direction, at least until from 9 to 10, because you have a solid 4-hour close to lead the direction for the next 4-hour candle. But as of right now, it might be a little tricky because you're trying to figure out if this 4 candle is going to flip or not within this current candle. But there's a way to do that, and it's by using the smaller time frame. So let's go ahead and mark up what that flip is. So in this case here, the flip on the 4-hour candle is going to be 2156. I would say that level of 2156 is right here. So you can probably put a resistance right here and say, okay, cool. If you were to close above 2156.94, what is this, 943, you can probably look for buys above this range going up towards 2160, right back into that range fill. I guess that's the range you're breaking back into, right? So yeah, you say, yeah, cool. If price were to make its way up and flip on the 4-hour candle, and you get a closure above the range on the 15 or 30 at the same given time, or the 15, because the 30 can't close, that's a 4-hour close. But if you do get that on the 15-minute candle, then you can probably look for buys up above this range to fill the area at 2160. However, before that happens, again, you're still below it. Any given point you can just rip down, right? You don't necessarily need a top wick always. It's just high likely to form. But if it doesn't form a top wick, then you can grab more sells below a range. So if you're having trouble figuring out if this 4 candle is going to flip or not, and you're hesitant on the sells in the 4-hour candle because of no top wick, you can probably apply a range 2 breakout or something. So in this case, I'll probably apply a support right here and say, cool, I'll look for more sells below 2150, because below there, that's a range 2 breakout. You will have a range 1 here, range 2 here, and then below here will be clean coming down towards 2147. All right. But as of right now, within this range here, there's not much I can really say, because it's just in range and there's no direction just yet. And we're trying to figure out if the 4-hour candle is going to create a top wick, or if it's going to continue to push down for the rest of the 4-hour candle, which only is in 30 minutes, chat. So we'll see what happens here, chat. But I'll say anything below 21 as of right now, anything below 2150, 2149 should be good for sells to come down towards like 2147. I'm likely not going to attempt runners before FOMC. I highly doubt anything will run too steep, but the range fills are possible because these ranges are tradable, right? Like this is a range of 38 pips. This is a range up here of 36 pips, right? This current range is a range of, I believe, 58 pips, but there's no direction for me to take anything in this range, so I can't do much as of right now. But maybe 845 your next candle closure, and then if it's not 845, then it's gonna be 9 a.m. for you. At 9 a.m. you have a 4-hour closure, and it should be between 9 and 10 for trades. Okay, I got a dip at like 10. I got to hop off stream at around 10, so I won't be on for too long today, but we'll see what we can grab within the next hour and a half, chat. All right, man. That is the analysis, chat. It might be a little confusing today, but just understand it is FOMC. There are days where FOMC does move pre-FOMC, and there's days where you don't. You may or may not. Again, there's no guarantee of anything, but the only thing we can do is wait, because the moment you tap these levels, the moment you close above 456 or below 50, you can anticipate volume, because you're not closing above those ranges to do nothing. You're closing above those ranges to fill the ranges, right? So you can assume you get a move. So if you're having trouble identifying volume and when that's gonna occur, Just wait for the closures above or below the ranges, and it should be pretty straightforward today. That's when you should get your opportunities, chat. In this range here, if you're not certain on direction, which I'm not certain at all on direction right now, just wait for the breakouts. Simple as that. All right, man. So yes, it was a little different because yesterday you weren't heavily in the range just yet. You were just starting to push into the ranges. So we anticipated the push up. I think we took buys around here on this candle, right? So we took buys around 60 or 5.7. Anticipated range fill at 2160, and it was the first time breaking to the range. But now it gets a little more tough. You can't take the same breakout or same play just because you're forming one massive range right now. There's no direction within this range, obviously, right? But yeah, man, that's it. That's the day, chat. So it's just it comes down to when price decides to push. All right, that is gonna be the day. It can be simple if you have a plan, right? Right now it's very simple. You have a plan. We know what to do. We know exactly what to do when price goes up. We know what to do when price goes down. When you don't have a plan, when you don't have a playbook, it's gonna be a tough day for you because now you're sitting there like, how can I make so and so amount of money within these candles, right? That's the logic you have. Instead of that logic, you should have the logic of, okay, what's the best opportunity that presents here for me to take a trade, right? That's the right mindset. But you shouldn't be asking yourself, how do I make 10 pips on this within this range here? Because it's not guaranteed, right? You're not always gonna be breaking out the ranges. You may be stuck in this range, and you might start FOMO into trades, taking trades they wouldn't be taking in the first place, right? So you can be alright, man. FOMC's later. Worst case, you can trade FOMC. I know a lot of you guys are gonna have a lot of trades and potential buy sell stops. So I mean, if you are gonna do that, I wish you the best later. I won't be on for FOMC, however.